Hey Patrick.
GM, sir, how are you doing?
Yeah, I'm good. How are you?
Yeah, doing good as well. Enjoying the sun on my feet, and it feels so good to have some warmth on the feet. And yeah, it's been a busy week. It's been a busy week, and yeah, I'm doing good. Things are a little bit quieter right now in crypto, so a little bit more focus on I say IRL stuff, in real life stuff, right? So yeah,
Yep.
I'm doing good. Yeah, how was your week?
Yeah, relatively the same, I would say. Crypto has been pretty bearish lately, so I've been changing my farming strategies towards more bearish strategies, so more stablecoin
Hmm.
based. So my week has mainly been figuring out what are good places to park my stablecoins.
Ah, that's interesting.
Hmm.
I think that's a good topic for today, right?
Yeah, definitely, definitely. We will have a lot
Okay.
more to tell about stablecoins this topic.
Yeah, I think it's a super interesting topic that more and more people will get into it, and it's yeah, yeah. But yeah, let's dive into it later on. Do you want to start with the portfolio changes because it's the first session of this month? So, how is your allocation looking right now? Your overall portfolio?
Sure. So some major changes that happened compared to last month is that I sold my Phantom.
Mm-hmm.
I exited at a loss, but it was reasonably soon or before the Andre announcement. So
Mm.
right now Phantom is at 1.2, so it crashed even further. So I'm happy I'm out of it, but I'm still kind of sad to be out of it at a loss. And I have a lot more stables now. Well, when I say a lot more, it's still probably a little bit more than 1%, but
Mm.
it is at least like everything that is not Illuvium, Sol, or Allbridge, or Bitcoin, or ETH is
Mm.
stablecoins. So yeah, my stablecoin position is increasing, and I'm focusing on that with my yield farming. Um, and with regards to the rest, it's roughly about 50% Illuvium, about 40% ETH, about 8%, oh sorry, 40% BTC, and 8% ETH.
Mm. That's interesting. And you also said soul. How big is your soul position?
Couple of percent. Um,
Wow, really? Okay.
yeah,
And you said that you would like to build up your stablecoin position even
yeah,
more, right?
yeah, exactly.
Any
So,
plans on what you want to sell?
um, nothing. So, I will be I will build it up by by fiat on ramps basically. So by
Mm,
increasing my yeah my crypto allocation slowly. So this is what I've been
mm,
doing for the month of February. Um, I bridged. So basically, what I do is I onboard fiat to FTX, and
mhm,
then I buy Phantom, and then I bridge it to Phantom Chain from FTX because that way you
mm,
pay almost no fees. So and then you can swap it back to stablecoins.
mm. Okay, yeah, smart. Cool.
And what about you, Patrick? How's your portfolio changed?
Um, I did two transactions during the February where I basically transacted a little bit of my BTC into more risk on assets. So Um, obviously, the timing could have been better, but yeah, I think for long term it makes sense. So I'm sitting at 65% ETH right now, 25% BTC, 8% stables, 1% DFI, and 1% is random stuff. So I basically moved some more of my BTC into ETH because I think over the next 5 years, and this is my time horizon for now, 5 years, I think ETH will outperform BTC. And I also built up some smaller positions and let's say not that risky altcoin positions. To give you some examples, I bought some Matic, I bought some Illuvium, I bought some I bought some CRO, I bought some FTT, I bought some Avalanche. So not the degen coins, but more like the legit coins. So I'm heavily into ETH because over the next 5 years, I think I don't see anything where I have high conviction that could outperform ETH with the risk I'm willing to take right now. And BTC is more like a hedge if the world goes to shit. And yeah, so the rest is just the stablecoin farming, making some yield, losing some money on on some degen farms, and yeah, just some stablecoin farming.
And what about Luna? Do you have any Luna?
I have a super small Luna position, like 0.05% or so, just super small because I set up a Terra Station wallet and I was trying to learn how how you set it up, how how you stake it, how you delegate it in order to get airdrops. So it's more like an educational experience for me.
I see, I see. Okay,
Why are
cool.
you asking?
Well, because it went up a lot, and I
Mm.
was wondering if you also had, because you have a lot of blockchain tokens, basically.
Mm.
So I was wondering if Luna was one of them.
No, no, unfortunately not. I had a couple, but yeah, I sold them. When I panicked, sold basically most of my crypto assets. I think in February when the first crash happened. Then I basically sold everything of my not high conviction bets.
Hmm. Okay.
Okay, okay. You do want to transition to remarkable things?
Yeah, sure.
Okay, okay. Do you want to start? Do you want me to start?
Yeah, yeah, sure. I will start. So this week I've got a couple of things around basically statistics on blockchains. So one of them is a new dashboard that I came across that is from Dune Analytics. So Dune Analytics, for those who don't know, it is basically an analytics platform where you can do search queries on the blockchain. So you can search for certain wallets or certain volumes, between certain wallets, etc. And they allow you to make dashboards into it pretty easily. So it's really nice if you want to explore the blockchain. And someone called Denning Sui, he made a dashboard for Solana because Dune Analytics has recently integrated Solana. And one of them was quite interesting, and it was a dashboard on the Solana user base. And
Mhm.
yeah, just you can see some statistics that are pretty interesting. For instance, there were 2 million monthly active users on Solana, as indicated by wallets. But yeah, this could be inaccurate. And for
Mm.
instance, in February, there were 290K monthly active users for the DEXs. So this is already a little bit more accurate, I would say,
Mm.
because a lot of people make multiple wallets, for the NFTs or for other things, or for safety, to make burner wallets. So I don't think the monthly active users on Solana is very accurate, but I think the DEXs is already a little bit more accurate. And some things that jumped out to me, Patrick, is that the monthly active users in November on DEXs was about 510K, and now it's about
Wow.
290K. So
Mm.
it almost halved. So
Mm.
it seems like it followed basically the price movement
Mhm.
pretty closely. And another thing that was interesting is because personally, when I do swaps, I use an aggregator called Jupiter Aggregator almost every time.
Mm.
And Jupiter Aggregator had about 60K monthly active users. So there's still about 230K out of the 290K who don't use Jupiter, it seems.
Mm.
Um, and within the DEXs, Serum is about, it's the numbers are going to be a little bit difficult, Patrick, because these are sometimes double counted, right? Because Serum is
Mm.
under the hood for a lot of these things. But
Yeah.
Serum had about 230K active users, Radium 65, and Orca 55K.
Mm.
So what was really surprising to me is that first of all, Orca is really creeping up to Radium, and second of all, yeah, how huge Serum is. uh,
Mm.
yeah. So what do you think about it?
I think this is super interesting, and I would be really interested in, and I know that's a really tough question, but the amount of users basically that are behind all those numbers. Um, you mentioned a really good point, the burner wallets, and if there are, for example, 2 million active addresses, as you said, My guess would be that you have to divide it by at least 10, most likely by 20 or even more, because I myself use multiple wallets, so those are active addresses. So I'm wondering, what would be a rough estimation on the active users on Solana right now? And if I were to take a guess right now, it would be between 25K to 50K. And if we continue on this quite a period, it will go down to 10K to 25K or so. Um, what do you think about this? What do you think uh, about the number of active users actually right now on Solana?
Yeah, so it's a little bit tricky for me because um, I find like monthly active users, are they really that active? In my view, people who are active they use Solana like every day or every week,
Mm,
something like this. But like every month, I don't think that's a very stringent activity measure. If you look, for instance, at the daily active users on Solana as a whole, it's about 200K in February.
mm,
But that's daily, and even I don't always interact daily lately. So
mm.
maybe that only includes like the more hardcore people or bots or whatever. So I find it kind of tricky as well to measure it. Yeah. So, but I wouldn't count. I wouldn't divide it by 10. I think 10 is way too much. I think maybe.
What? Wait, what?
Yeah. I don't think people have 10 wallets. Most people. I don't have
Okay,
10 wallets. I have only a couple, for
okay.
instance.
Then
So.
I'm not a people.
Yeah, I think you're just extra safe and
Mm,
good,
mm,
but I think you're in a minority compared to most casual users. Do you really think
mm.
they're gonna make a wallet for every transaction they do?
I don't know. Those NFT mentors, they make a lot of burner wallets, a lot. Mm. But yeah, I could be
That's
off.
true. Okay, but
Mm,
the interesting thing is you can also see the NFT market, the NFT daily active users, and
mm,
that's around 60K in total for yesterday, for instance.
mm,
So even if you deduct those people, I think a lot of people won't
mm.
have more than a couple of wallets, personally.
Yeah, fair point. Yeah, yeah, I think it's a really cool starting point, and let's hope that someone smart will come up with a smart way to figure out what are actually the people behind it. And
Yeah.
yeah, but this has always been an issue, and it hasn't been solved on Ethereum or Bitcoin just due to the fact that the public and private key scheme is just it would be weird if someone can solve it.
Yeah, true.
Yeah, okay, okay. Do you think do you have another topic or
Yeah, I have another topic. So you must have noticed this week that Luna went up a lot. Um, and when I look at DeFi Llama today, I noticed that the Terra blockchain, it is now around 26 billion TVL, and
mm,
it is now
wow.
more TVL than almost more TVL than the next three combined. So it has more TVL than Binance Smart Chain, Avalanche, and Phantom combined, almost.
Wow.
So in my view, this is really significant. Like, I feel like Terra Luna, it has really um, moved away from the rest of the pack in terms
Mm,
of TVL. And yeah, 50% of that is pure just Anchor. And they only have 22 protocols on Terra Luna, so it still feels like a chain that is doesn't have much to offer except for
mm,
um, Anchor and maybe Astroport or something. But I need to explore it more because there must be something more to it than just Anchor. Because I think there's a lot
mm,
of people who are very enthusiastic about this blockchain. Like the community seems pretty, yeah, pretty big. And I find I have a hard time believing it's just Anchor that is causing their
mm,
excitement. So yeah, and with regards to Anchor, so for those who don't know, it's basically a place where you can park stablecoins for a very stable yield. It's around 19% APY right now. And I saw that Polychain, which is a VC, they did an vote, like a governance vote earlier this week, to reduce the APY for whales to make it more sustainable. Because yeah, I find it hard to believe that this anchor yield is going to be sustainable.
Mm.
Someone must be like, fueling the furnace with money to keep it on, basically.
Mm.
But the the vote got shut down, so there's probably some wheels on Anchor who don't want their their yield to be reduced, and
Mm.
their vote was basically to, if you have more than 100K USD, then your APY gets cut, like to 15% or 10%, depending on
Mm.
how much you put in. And what's also pretty interesting, I didn't know that, is that USD is now 7.5% only, backed by exogenous collateral, like BTC. So it is basically, more than 90% algorithmic, which is kind of scary in some way. What do you
Mm.
think about Anchor and UST Luna?
Yeah, I think right now is their time to shine. Um, because people basically agree that we are in a quieter market, and they're still looking for getting into safer assets, because the world can get quite weird. And if you are in the safer assets, let's say cash, for example, yeah, I think Luna is just it's just their narrative, right? For now,
Hmm.
it's just stablecoin farming. We want to have the stablecoin ecosystem, and I think if they go broader and try to compete with Ethereum for the whole DeFi market, for example, I'm not quite sure that this will work. I think Anchor has a lot of TVL because it's the main use case. And if everyone thinks about a UST, they most likely would think about the 20% APY. So I need to do more research again as well. Um, but I don't think that they will venture out in the broader DeFi space. They most likely will, but yeah, I think that's not the main use case for them. So yeah, I did little bit of research about Luna and Anchor Protocol as well, but I'm still a noob, and yeah, so yeah, just we need to do a little bit more research, I guess.
Yep.
Okie dokie. Do you have another topic?
Now let's end it here for the sake of time.
Okie dokie. Yeah, I will keep it quite brief. I have two topics actually, and both are in regards to risk management, and also came out of my own learnings. And one learning came from the guy, Wales friend. And if you are farming with stablecoins right now, and please listen up, my dear friends. Um, let's say, for example, you have a stablecoin. Let's say you have USDC, for example, and you say to yourself, okay, nice, it would be great if I can get yield on my USDC. Then you have to take into consideration, okay, what risk am I actually having of holding USDC? And this is mostly to Circle, so the risk is quite low. But then you also get a pretty low APY if you provide, let's say, pure USDC, for example, to Frankium, you get, let's say, 5%. But you could also do some other stablecoin farming, where in your mind it says, okay, I'm doing stablecoin farming, but you're actually expanding on your risk a lot. And I would like to give you a clear example. So there is this cool guy on YouTube and on Twitch. He's called Whale's Friend, and he put about 16,000 US dollars in a stablecoin, which was called Mix. And then, if you switch, let's say half of your USDC holdings to Mix, you can start LPing in the Mix USDC pool, for example, and then you get, let's say, 30% or 40%. And the issue is that, yeah, Mix could lose his peg, or Mix could get rugged. This is actually what happened to Wild's friend. So he deposited about 16,000 euros or dollars into Mix, and then yeah, basically Mix screwed up, and now he basically lost the whole 16K. And if you take into consideration, let's say for example you do this with let's say $1,000, and you just hold USDC in your wallet, after 1 year you have $1,000. If you put the 1,000 USDC into Frankium, after 1 year you have 1,005 USDC. And if you, for example, put those $1,000 into a pool of Mix and USDC and Mix gets screwed, guess what? How much money you have after 1 year? Zero. You have zero. So my question is, let's say you take the risk of, let's say you get 20% APY on a stablecoin pair USDC Mix, for example. After 1 year, if everything went fine, you have $200 more. So 200, right? 20% out of 1,000. And the question I'm pondering right now is, what risk am I willing to take actually? If I'm running the risk of, let's say, losing my funds or my stablecoin funds in 5% of the time, so let's say every 20th stablecoin will get screwed, and you can take a look at the history. There are multiple ones, like Mix, for example, or the real prominent one of Iron Finance. If you expand on your risk profile for, let's say, 10% more yield, but you run the risk that in 5 to 10% of the time you lose all your money, I think the EV is not good. I think this is a minus EV play. So I'm pondering right now two thoughts in my mind. And this is basically the TLDR. I would like to find out what is the risk I'm actually trying to feel comfortable with. So holding my wallet is also basically zero risk. And also, what about the management I have to take in order to get the yield? So for example, if you put your USDC into the Mix USDC pool, you have to harvest your rewards, you have to swap them, you have to check at the APY, if the APY is still at 20%, or if it has fallen to 5% or to 30%, and why is this so? And what are the developments of the Mix protocol? So yeah, I'm pondering those two things. How much risk am I willing to take? And how much management do I'm willing to take in order to get the extra more yield? Yeah, what do you think about this? Those thoughts?
Yeah, I think the Mix stablecoin it was algorithmic, I presume, right?
Yeah.
Yeah. So in general, I would be pretty cautious with purely algorithmic stablecoins. Yeah, personally, I don't use any of them. I like partially like algorithmic stablecoins, like Frax, for instance, or maybe even like Luna, or Terra, which is also an algorithmic stablecoin, but that one is, is backed by billions, so it's a little bit different than some kind of degen stablecoin on Solana. So yeah, for me, it really depends on the type of stablecoin. So for algorithmic stablecoins, for most of them, I wouldn't dare try to use them, especially when they're in a more degen range. But for instance, something like cash, I believe it is backed, right? It is collateralized.
Yeah.
So for these ones, I feel a lot more safe. And also for UXD, which is also purely algorithmic. Yeah, I'm not 100% sure, to be honest. On the one hand, I'm wary of any algorithmic stablecoins, but when what's it called, the multi-chain is behind it, and big VCs with smart people, UXD may be the first algorithmic stablecoin outside of USC to work. It's in general, yeah. So in general, the risk is not worth it for algorithmic stablecoins, and for a little bit less, but like more degen like cash, for instance, but they're still collateralized, or for instance like MIM, I find the risk very low. So I'm totally comfortable taking a couple of percentage extra APR if it means that I have to go into a collateralized stablecoin like MIM or like well cash. To be honest, I'm not sure about cash because it's a lot smaller than MIM. So yeah, it depends a little bit, but I wouldn't put all my money in cash either. Yeah, so it's tricky, Patrick, but you are right. You do have to take into consideration the chance of the deep. But in general, collateralized stablecoins, they're over collateralized. They rarely lose back. Like I can't remember a lot of them that have really lost backs and permanently lost it. Like temporarily you can lose it, but even MIM, when it has all the pressure, it's still at the pack. So yeah, I'm not that concerned about over collateralized stablecoins.
I think you brought up a really good framework. I haven't thought about this in this way. So So thanks for sharing your thoughts. I think this is really interesting. So algorithmic stablecoins are much riskier, and the collateralized ones are quite good, I guess. What do you think about the bridged ones? For example, there is the opportunity right now to get, I think, 30% or so on AEUSD and cash, I guess. So AEUSD is a coin from the All Bridge. What do you think about those kind of security risk, where
Yeah,
a bridge is basically behind it?
I think if the bridge is reputable, like all bridge, the coins are 100% safe because they are backed one to one by like the AEUSD. Oh, you said AE, right? Um,
Hmm? Yeah,
I'm not sure where the E stands for, which chain that is, but it's like Allbridge, EO,
Ethereum, I guess.
Ethereum, maybe Ethereum. Okay,
Hmm?
so it's like Allbridge Ethereum USDC. So it means that Allbridge, someone, swapped his USDC to Solana, and Allbridge locked the USDC on Ethereum, and they unlocked it on Solana, or they minted it on Solana, right? So these kind of tokens are always one-to-one backed. So unless you
Hmm.
suspect the bridge to fail, or there to be some hack or whatever, then these ones are super safe. They're not over collateralized, but they are perfectly collateralized, and they are collateralized by the same asset as well, like USDC to USDC. It's not like
Hmm.
MIM where you can have like weird random coins collateralizing the MIM. So I find these are very safe if the bridge is reputable. And all
Hmm.
bridge is reputable in my view, so I have no issues with that. And yeah, you may say that there's some issues with liquidity and stuff, but Albridge is also incentivizing the liquidity or providing it themselves to bootstrap it. So yeah, I'm not totally not concerned about these
Hmm.
tokens.
Wow, cool. Yeah, this was really helpful for me, and yeah, thank you. This is something I will take into consideration. Awesome.
Yeah, sure. And by the way, on the Albridge, they have like a monthly overview, like of their of the performance this month, and they have also a list of all their token pairs that they have on all chains, and you can see the
Hmm.
APRs there. So that's pretty interesting, maybe to
Hmm.
take a look at, because I
Yeah,
find these kind
cool.
of deals are quite good because you have two stables and there's continuous demand because people are bridging back and forth and stuff. So
Hmm. Yeah, cool. I will check it out. We could also put it in the show notes. Awesome. Thank you.
sure.
I just have one more remarkable thing, but I will keep it super brief in regards to time. So, basically, the TLDR is that I got rugged, and I got rugged, and this was a small rug because I was worried that it was most likely a farm that will rug me, and it was called Soul Hero Finance, and I learned something out of it, and I would like to share with you and the listeners. So, I had a couple of $100 in a wallet. And I was depositing $10 or so into a farm because I thought that okay, if I deposit, let's say, $10 into the farm, I just at the risk of losing $10. But I learned something, and this is what I learned. So if, and this is a really big risk for Solana, especially if you, for example, put in some money into a farm or go into a pool, you don't see actually what you're signing. And in this case, I signed a transaction where I deposited the $10, but I also gave them unlimited approval to spend my USDC without me without me confirming the transaction. So I was quite lucky that they didn't rug all my USDC because they could have done it without my permission. I think I had just too little USDC in my wallet after all, and they were waiting for me to get little bit more in my wallet, or I was just on the list of all the wallets that they will start draining. I was just a little bit lower than other people. So my TLDR learning is the following: um, just interact with protocols where you have high conviction that they most likely won't do this scammy things. And if you want to check if your wallets are at risk, we can provide a link within the show notes where you can actually check if your wallets are at risk. And I've checked all my wallets and I was at risk 9 out of 10 wallets basically. So 90% of my wallets I gave unlimited approval to spend my USDC, USDT, and stuff like this, and even on Orca. And if someone is able to rug Orca, I'm not quite sure if they were able to drain my wallet, but there is a risk. So yeah, the learning is basically check your approvals from time to time, and people can drain your wallet without you even noticing it.
Yeah, that's extremely scary, scary, Patrick,
Mm,
that you mentioned it. Yeah, this is the case for burner wallets that you mentioned earlier, right? So
exactly. Yeah.
if you want to farm somewhere, make a burner wallet and then send your money to that burner wallet and then farm there,
Yeah.
basically. Um,
Yeah. And
and
even the ledger couldn't help you there. It's just they have access to your wallet. It starts gone. Even a wallet, a ledger, it doesn't protect you in this case.
yeah, it's really scary. Like, I wonder, like, how come that you weren't impacted straight away because
Yeah.
the transactions on Solana are pretty fast, right? So couldn't they just
Mm.
do their whole user base basically in a couple of minutes?
Yeah.
So what happened basically? Did you get notified somehow and then or was it yeah? So yeah,
I can
so
just speculate on it. So first,
mhm.
I noticed that within a couple of minutes that when they rugged. So I was quite early. And the second point is, yeah, the speculation I mentioned. Um, I I think they were basically busy with rugging their whole TVL, and they haven't set it up in a professional rugging way. Again, no hacking advice here. Um, but yeah, I think I was just a little bit fortunate, and if I would have waited a little bit longer, they would have taken my USDC.
Okay, damn,
Maybe
really,
they were
really.
speculating on that I will put more money into it and in a couple of months or so, because I read some stories where people actually deposited a couple of thousand USDT into the wallets months later, and within seconds it was gone. Within seconds you lose thousands of your dollars because yeah, you gave an approval a year ago or so.
Yeah, scary stuff.
Yeah. Okie dokie. Yeah. With this being said, do you want to transition to exciting things?
Yeah, sure.
Okay. Do you want to start?
Sure. So I'm excited for stablecoin farming at the moment, as you may have noticed.
Yeah.
So this week, what I've been doing is I've supplied like MIM or Bitcoin or ETH to Scream, which is a borrow lending protocol. It's a balancer clone on Phantom, and then I
Mhm.
borrowed the Phantom token itself, and then I yield farm with that single-sided on protocols like Taro or Impermax, and I was getting quite high APRs, like maybe like 50% supply APR, and I borrowed
Ooh.
them for around 5%. However, when I checked this morning, the party was over, unfortunately. So the borrow APRs have gone to like 15 to 20%, and the supply APRs have dropped to like 28%.
Mm,
And if you then also take into consideration the gas fees for Phantom, they're quite, well, they're reasonably significant. You pay a couple of euros per per time that you do the whole thing.
mm,
It's almost not worth it to farm there anymore. So I'm now with a kind of a dilemma on what to do. Um, I looked at some other chains like Metis, where I can also supply for a higher APR. I can supply there for about 50% and borrow for about 5%. This is like kind of similar situation. But on Metis, the gas fees are higher. And to bridge there, I pay more in fees to bridge to Metis than I earned this week on Phantom. So
mm,
I'm really like wondering like what should I do? Should I stay on Phantom and have my lower APRs, maybe 10%? Or
mm,
should I take the cost and switch to Metis? Or should I go back to Solana where the transaction fees are really low and the APRs are
mm,
also relatively low, but still, I mean, well, if you compare to transaction fees, then uh, you earn relatively more. So yeah,
mm.
I'm really in a bind on what to do this week with my money, and that's the downside I noticed for stablecoin farming because when you're farming with risk on assets, usually the bridge fee is like nothing almost, or it doesn't feel like nothing, right? You could make it up in a couple of days. But when you're stablecoin farming and you're only farming APRs of maybe 30% or less, then fees suddenly start making a huge impact. And yeah, I really feel like I'm stuck with my money a little bit, Patrick. Um, Either way, whatever I do, I need to pay a lot of costs to get out of it or to stay in it either. So
Mm.
so yeah, this is what I need to figure out
Mm.
this week.
Let me ask you a question. I think you can get really with less effort, and most likely for the next couple of months, you can get 20% just going onto Anchor protocol on Luna. And what kind of APY do you want to see from other strategies to make it worthwhile not going into 20%?
Yeah, so for me, um, yeah, it depends a little bit, Patrick. So you're basically asking like, what kind of interest do you need to get out of bed in the morning, pretty much. So yeah, I used to be very intense. Like for instance, on Tarot, if there's one pool with like 45% and another one with 49, and then I would swap it already.
Mm,
But
mm,
nowadays, because the gas fees are higher and yeah, it takes also a lot of time to administer it. I would say, it needs to be at least 10% higher than what I can get somewhere else
mm,
before it's worth it. And yeah, now that you mention it, um, it will be hard to find something that's 10% higher. Maybe on Metis I can do it, but it requires a lot of fees and a lot of uncertainty as
mm,
well because the rates can collapse just like they did on Tarot, and then
yeah.
I'm even more screwed. So yeah, maybe I should just go there. But I wonder what the fees are to get into Anchor, like in terms of dollars, because
Mm,
their gas fees are very high, of course.
mm. Yeah, I can't answer this question because I have no idea. Um, but yeah, I think it's a thought for you to ponder actually, because yeah, if you farm with less than 1% of your coins, and you get, instead of 20% and just sleep well, don't have any active management, you try to get 30% or 40%. At the end of the year, it makes like $50 or so, that you have more risk, that you have more active management. Yeah, it could be fun and it could be educational, and you would feel like a yield farmer. But is it worth it? Yeah.
Yeah, maybe I should just do something more passive and then work on other things, like
Mm.
learn other skills or something, like learn
Yeah.
my Solana skills that I've always wanted to, for instance.
Yeah.
That would probably be a better use of my time than yield farming for a couple
Mm.
of dollars per week.
Mm. Yeah. Yeah, cool. I don't have a good answer to your question, but I think, yeah, over the next couple of weeks, on our podcast, we will expand on this question, because I'm having basically the same question. So yeah, I think we will just naturally go more into this direction and give you and our listeners some inspiration for new ideas.
Yep.
Do you have anything else?
No, no, no. This is the main thing.
Okay.
What about you, Patrick? What excites you?
Yeah. So I'm excited about two things, but I think in regards to time, we just focus on one thing real quick. So, but I would like to actually mention the other thing, and I will start with it.
Sure.
So, uh, I'm actually really excited about what is going on right now with all the development that we are doing behind the scenes of this podcast. We involved some of our developers, and they are really, really into it, and some other people are willing to help in regards to UI and UX. So I think what we're building right there is basically a tool to help us yield farmers make better yield and get a quicker overview of what is actually out there. I'm really excited for this development, and I'm also really excited. And I haven't shared this idea with you, Mark, yet. But we were thinking about, and we will actually do this. We will join the Riptide Hackathon on Solana, and we will submit a proposal so we can hopefully get into the finals and get into discussions with potential partners and investors. But yesterday I heard an episode from Green Pill. It's an episode of Bankless, and they were talking about Gitcoin grants. Quick explanation: Gitcoin grants is basically a grant scheme, a grant program where you can apply with your proposal, and then they will give you a grant. You will get approved for a Gitcoin grant, and then people can give you money if they think your grant is awesome, and Gitcoin will provide additional money, so you will basically get crowdfunded money. But the whole episode was mainly around what are grants, what is Gitcoin doing, and what is possible for us as builders within the ecosystem in regards to grants. And I really am getting excited about a lot of grants out there about what this could mean for potential builders to get some initial funding. You don't have to pay it back most of the times. So yeah, I need to do a little bit more research. But this is a topic I'm really excited about. Do you have a quick comment about this, or do you want me to go into the other topic real quick?
No, I think it's very cool. I thought Gitcoin grants were more a little bit like charity or something, but now that you make it sound, it's more like grant oriented, really. Then I
Yeah.
thought Gitcoin was more like a charity.
Yeah, they are transitioning right now. They were like a charity, but they will transition right now to Gitcoin 2.0. And Gitcoin 2.0 is more the vision that you will apply there with your grant proposal. And if they say that's awesome, they will basically distribute it to a lot of different grants. So to the Uniswap grant, to the Yearn grant, to the Coinbase grant, to whatever. So they want to be a grant aggregator basically. And
Wow.
I think that's awesome. And yeah, for us as builders, it's grants are a blind spot, and we have so much things to do that yeah, we didn't have the time to look into it, but I will venture more into it, and I can give you and our listeners an update on what is actually out there for our builders.
Yeah, cool.
Okay. The other one that is really exciting to me is the second note about Wellstrand. So the GRAPE protocol is I'm pretty sure that Wellstrand is one of the co-founders of GRAPE protocol. In GRAPE protocol, they have the feature that you can buy GRAPE and you get access to multiple channels. And I did it, and I'm a really satisfied customer and a really satisfied user of the community. They have different channels to finding potential alpha. So, for example, they have the Solana channel and the curated alpha channel. And in those channels, they talk about new things that are going on in the Solana ecosystem, like new white papers, new protocols. They talk about different theories that could play out, different curve wars, for example, on Solana, but those are mainly based around the Saber and Sunny aggregator. And they have this really interesting experiment, which is called Alpha, and I would like to talk about for a second because I think it's interesting.
Sure.
So Alpha is basically like this. You have the opportunity to buy the Alpha token. And if you buy the Alpha token, you get access to a community within the GRAPE Discord, which you don't have access without holding it. And this is not that particularly interesting, but the Alpha token in itself is interesting because it has a really interesting dynamic. Let's say you buy one Alpha, and then you buy it for, let's say, 2,000 GRAPE. And the curve behind it is that the next one who buys it, he has to pay basically exponential. So 2 times basically what the person before him paid it. It's not roughly to the power of 2. It's more like a weird function. But the more people buy it, the higher the price gets. And then you can say, okay, that's a Ponzi scheme. And it most likely is. But there's also the other interesting part, and this is what makes me really interested about it. If you want to sell your Alpha token, 45% of the what's it called, the value gets distributed to the Alpha DAO, and the Alpha DAO basically pays for the researchers. So the researchers, if the researchers do an awesome job, they will get more awareness for their GRAPE Alpha channel. So more people are willing to buy the Alpha channel, the Alpha token to get access, and they are highly incentivized to hold. And if they sell, the treasury will basically gets paid in a huge way because 45% taxes basically are quite big. So this is an experiment I've taken place in, and I've been there for a couple of weeks or a week by now. So something really interesting which is happening within the ecosystem. And yeah, like I said, I do get a lot of value out of the Grape ecosystem. I think they do an awesome job, and the Alpha experiment is a quite funny ride, actually. What do you think about it? Any comments?
Yeah, I think it's just these are really fun, like financial incentives games, and yeah, they're like little experiments, you know.
Mm,
And I'm curious to see how it will play out. Um, I do think that personally, it would be even better if they, instead of paying out to the developers, if they paid out to the remaining hodlers. I think that would
mm,
provide some extra incentives to stick around. Um, and yeah, I think. Yeah, you wonder what kind of intrinsic value is provided by this alpha token, right? Because it grants you access to this alpha channel.
mm,
But I would think that the more people enter it, the more the value gets degraded because um, generally very crowded channels, they have a lot of idiots in there and they start making start arguing and
mm,
stuff. So I wonder how you can grow the channel and at the same time keeping the alpha pure because the bigger the
mm,
channel, the less alpha it will generate.
mm,
So yeah, I think it's just very interesting to see how it will
mm.
play out, but but not more than that.
Yeah, it's interesting that you mention it, and because I haven't mentioned it. It's you get read-only access to the alpha channel, and it's basically you get access to the researchers. They have a discussion basically. Those verified grape researchers, they have a discussion, and so you get into the first thoughts of them, and if they get more further on with their thoughts, it will get most likely forwarded to the other alpha channels. So you're basically at the source of the researchers. You can see into their minds basically.
I see. Okay,
But
that's in that case that makes it a lot better.
yeah,
I would still think the more users that can read it,
yeah,
the fewer the alpha because more people are going to make use of those tips, and then
yeah,
so yeah, it's
it
better
gets
if it
diluted like TVL.
yeah, it's better if you keep it small, but
Mm.
it's a very cool experience nonetheless.
Yeah, they experiment a lot, and I think it's just fun for now.
Yeah,
Okie dokie, do you want to transition to our Solana portfolio challenge?
yeah, sure.
Okay, do you want to start?
Yeah, sure, I'll start. So we're in week 17 already. Um, Last time my dollar value was $704 and now it's $718. So I gained about 13 and a half bucks or about 1.2%. And I outperformed Solana, which dropped by about 2.7%. So I did reasonably well, both in dollar terms and in SOL terms. And what I've been doing lately is the same thing that I've been doing in the previous weeks. I've stayed in the
Mm,
Cropper Sol USDC pool for the remainder, and I've also been quite lazy with my with the rest of my USDC. And actually,
mm,
I kept it in my wallet, like 200 USDC, until yesterday. Yesterday, I
mm,
finally started putting it into action. What I've done is I've deposited in, I think, in Apricot, and then I borrowed
mm.
Orca, and then I supplied Orca
Ah,
to
okay.
I think Francium or Tulip. It changed. Like Francium had really high Orca APRs for one night, about 90%, but it has already dropped a lot. So I need to check it out. I
Mm,
think Tulip is probably better now.
mm,
So this is what I've been doing with the remainder of my dollars.
mm.
And what about you,
Yeah,
Patrick?
yeah. I'm basically uh, so pretty much the same like you did. In regards to I haven't changed nothing right now. I think I'm really good positioned right now because I'm in a lot of vaults. I'm in the chest finance vault and the katana vault and the friction vault, and I feel super comfortable right there. It's basically a bag I'm holding right now, which is based out of I'm having exposure to BTC, ETH, Solana, and stablecoins, and I feel really comfortable with it right now. I managed to make $10 this week, and I managed to outperform Solana by 0.25 because Solana dropped a little bit. So I think from a strategy point of view, I feel comfortable with my strategy right now. I feel good exposed, not too much risk, not little risk. Also doing some airdrop hunting, and Chest Finance will release their Chest token, and they said that they will reward early contributors. So yeah, I'm hoping that I will get a little bit out of it. And so again, I think Katana raised this week $5 million in a seed fund or a Series A. I need to check the real round. What was it called? But it's usually like, okay, we have our product. So they were a hackathon winner actually. Then they launched a product. Then they get initial traction. Then they get VCs, and the VCs want to make their investment liquid. So most likely they will launch a token sooner or later. And then the question is just, are those VCs interested in having the community rewarded for being early users? And I'm quite hopeful that Katana and Friction will do it as well. But if not, that's totally fine, because Katana and Friction bring really good APY right now to BTC, ETH, and Solana and USDC. So yeah, I'm just basically chilling right now. I'm basically chilling.
Okay, cool. And the vaults didn't lose any money, even though we were in a bearish trend.
Yeah, and that's a really big topic, and I will keep it really brief to answer this question. If you take a look at the website, they show it like, okay, you haven't lost money, but they do some weird accounting tricks. They don't take everything into consideration. They sometimes so basically, I will keep it super brief, and I will encourage our listeners to take a look at the detailed data. So let's say, for example, you sell an option. By selling an option, you get a premium. And what they're actually doing, and I'm not sure if they do this right now, but this is my last state where I took a look at it. They basically divided the premium by the amount that they sold the option. So let's say, for example, you have $100 and you get 1% and you get $1 premium. Then you can say, okay, you made 1%, awesome. But what about the prices drops a lot and your put options are going into red? You basically lost money, but you made money on your premium. So this is not really the real APY, from my definition at least. They can frame it different. They can frame it however they want to, I guess. But yeah, I'm not quite sure on the actual APY. If I take a look at my outperformance of Solana, I think that the vaults they haven't lost money, but that's just the guess for now. I need to do a little bit more research.
Okay, good to know.
Okie dokie. Yeah. Anything else on your mind, or do we want to wrap it up?
No, let's wrap it up here.
Okie dokie. Yeah. Guys, quite times, and no one will know what will come over the next couple of weeks and months. Stay optimistic, stay positive, stay bullish, and we see you next week. Take care.
See you next week.